Now let's break down the budget breakdown. And that is what we're going to do in this next 15 minutes. But first, let's look at what the president says is a budget of recovery and growth, 7.298 trillion naira. That's a lot of money on the table, going even by today's exchange rate. That's a lot of money, but of course, a lot has to go into that budget. So where will the money come from? Where will it go? Let's start this conversation on the framework, the assumptions, and what the prescriptions will look like. Well, you can see a few of that what was contained in the fiscal framework and those what you can say the graphics there from budgets. That thank you very much, folks, for supplying that to this conversation. We thank you, folks, at the budget for bringing that in the breakdown, the proposed 2017 the fiscal framework. Now let's get the panel to choose some of this, and we're going to throw those graphics in there for you to get a bit of a sense of how it's all broken down. But let me start this time from Bismarck Rawani, who was also to do a little bit about the budget. As far as the framework is concerned, what's your take?
When you're in a recession, ideologically, you spend your way out of it. And you spend impactfully, and you spend in such a way that it creates inclusive growth. That means employment. So a recession is defined as contraction in economic activity coupled with high unemployment, weakness in the financial system, and a reduction in confidence. Now, what has happened is that if you take the Naira terms, Naira nominal expenditure is up by 20% in 2017. But if you take the exchange rate factor into consideration, you'll find that what we actually spent in 2016 was $30 billion, and what we are spending in 2017 is $24 billion. So actually, there's a contraction in expenditure in dollar terms. If you take inflation into consideration, there's a further contraction. If you take population growth into consideration, there's a further contraction. So in reality, what we should be having is an increased expenditure. And we are seeing that in nominal terms, which is good. But in reality, we are actually spending less if you take it in real currency terms, in dollar terms.
Well, where are your concerns as far as the framework is concerned, the fiscal framework?
Okay. I think from the positive side is to look at what might happen to oil revenue with the plan that government has put in place in terms of engaging in the Niger Delta. If you can get the volumes back at 2.2 million barrels per day, and if the price remains between $50 and $60 against the budget assumption of $42.5, I think that would be very good for the economy, particularly from the point of view of supply of foreign exchange into the country. So we can see some improvement, in that area. However, I worry about potential for 2.5 GDP growth in 2017, particularly with what Bismarck has said, that it appears expansionary from the Naira absolute terms figure. However, in reality, the truth is that really this budget is not as expansionary as it appears to be.
Or as it should be.
As it appears to be.
It is expansionary, but not enough.
Not enough.
Yes.
Shoaib Idris, do you agree that the fiscal framework is good enough, is good, but not really good enough? Where are you looking at if you're looking at the framework? What would be your key point here?
I think basically, Bosun, there are 2, 3, 4, 5 assumptions underlining this budget that appears to be faulty, to my mind. Number one, an exchange rate of 305 naira in an economy where we know the value of the dollar is somewhere around 500 naira is preposterous for any economics to put as an assumption underlining a budget for next year. Number two, in an economy where we have inflation rate somewhere around 18 point something or 19%, and we are still looking at a possibility of an inflation of 12% next year, unless if you have a magician in charge of an economy, it is really impossible. Really impossible to achieve within the framework of what we are doing. Last but not the least, even the price of oil, to peg it at around $42.5 per barrel, I think is a bit on the high side when we know that as at today, the major buyers of our crude oil is India and some European countries, and they are not buying. There is reported just last night that 11% demand has gone down, the demand for our crude oil has gone down by 11% from the major buyers in Europe and India. and we are still.
But you're not comfortable with the fact that the price is going up, that we're looking at perhaps $60 a barrel.
Boston, we are looking, this is a potential price increase. We have, anybody who is a keen observer of what has been happening in OPEC and the non-OPEC producing countries knows that it is a fragile coalition. Okay. How are we sure that those reduction in production will be enforced? So
I need to take this very quickly, and I'm sorry, respectfully, cutting in there. I just want to take that up with Professor Kenneth Amaechi, who is joining us via Skype, a member of the Chevening alumni in Edinburgh. And I'm going to ask you this question straight, if you can. I'm sure you're connected to us now. Let's look at the price of oil and the assumption here. If we go towards 60, as I said, well, that is very fragile, so we shouldn't put the entire faith, as it were, in that 42.50. What do you consider as the best price?
It's difficult for me to say because I don't have the data. I'm sorry I would need to disappoint you there. But I think people on ground who are in better position to probably forecast where we need to be. So the exchange rate is very volatile at the moment. The oil prices are kind of going in directions we can't absolutely control. So I think it is in our best interest to probably hedge our bet against the worst case scenario. But going back again to the issue around the budget and the expansionary nature of it, I'm pleased to hear that we are beginning to talk about ideology. And Bismarck Rewani talked about the ideological slant, which is often ignored or taken for granted in issues like this. But even if you look at it from that perspective, one might also argue that if the government has delivered on some of the things they promised, which would include blocking leakages in the system, then it is fair enough to say that where we are now is very good. So it's not about throwing money at problems. It's not about increasing the budget for the sake of it, but also realizing the situation and placing it in context. So I would like to believe that the current budget is a reflection of some of the savings, some of the efficiencies that has been gained from the 2016 budget. But I stand to be proved wrong on that one.
Thank you, Professor Amaechi. But of course, we've heard it that Nigeria wants to grow its way out of oil, but it needs oil to also get out of oil. So that looks like a very stinky statement. Dolapo Oni is one of the special guests here. Is the head of energy research at EcoBank Group, and is in the audience here joining us. Dolapo, give us about 1 or 2 minutes about this. We want to get out of oil, but we can't get out of oil without oil. What does that mean to you?
I mean, it means a lot because, to be very sincere, if you look at Nigeria's structure, the way the economy is structured, we actually need the oil revenues. Okay, so I mean, to divest into other sectors, be it manufacturing, agriculture, or whatever sector you want to invest in, you actually need some revenue, and you need to fund some infrastructural development to ensure that you can actually divest to those sectors and start to, develop those sectors. So for us, right now, the bulk of that money will have to come from oil. But the interesting thing, and I'd like to quickly build up on what Mr. Idris also said, is that the situation with the oil price is really quite fragile. I know we expect $60 oil in the market, but if you look at what America is also doing with their hike of interest rates as well, which is strengthening the dollar, it's sort of counteracting the supply situation in the market, which is ensuring that dollar is stronger, more expensive for crude oil importers. As a result, we're seeing a lot of volatility, and I think we're going to see a lot of that volatility next year because that hike is still likely to come again in the first quarter next year. And if that continues to happen, even as the physical crude oil supply continues to tighten and it should be increasing prices, we'll still be seeing that affecting the demand side. So we'll have quite volatile prices. But I'm less concerned about crude oil prices. The most interesting thing is, how do we sustain production above 2 million barrels per day?
Okay. Now, Dolapo, I'm going to cut in there very quickly. My apologies there. I'm sure it's a very long conversation. That's part of the conversation around where would the money come from. But let's talk quickly about where the money is going. Let's cross over to Abuja Studios. Dr. Adeniyi, of course, we all know from 2016, and historically speaking, the lion's share of our annual budget goes to salaries and wages, emoluments, tea and coffee, and things like that, buying petrol to fuel the civil service and what have you. So, the money is going into 2017. Are you comfortable with the recurrent expenditure side of things?
All right. Many thanks, Basin. First of all, let me go back to your earlier question on how my students are feeling it. I avoided being specific on my students because the students are naturally part of the system. So whatever is happening from the global sphere, they also feel it. Well, you also permit me to concentrate a little bit more on the policy and politics aspects of the budget. And that will lead me to warning against policy somersaults. And the one I have in mind mainly is what the President said regarding the plan to whittle down the powers of the Public Procurement Act 2007. We know about this law. We know how it has saved this country of close to 600 billion naira in nearly over a decade of its operation. This is the time for us to make savings. This is the time for us to cut costs. This is the time for us to invest more in capital expenditure, like somebody hinted a while ago, so as to reflect the economy, spend our way out of the recession. And if this is actually the time to do all that, it is definitely, again, the time for us to cut off wastes and not create room, for looting, so to say, looting and wastages. Public Procurement Act has come out strong as one law, one reform effort that has helped in the reduction of waste in this country. This is the time to strengthen it and not the time to weaken it. So essentially, back to your question, I'm interested in us spending more on ministries, departments, and agencies with huge budget outlays, with heavy capital projects. That's all right, because we've been told by the economists with you there that is the only way in which we can reflect the economy, trigger some multipliers, and bring up and improve productivity and efficiency in the system.
Okay, well, thank you for those contributions. But again, let's check very quickly with the capital side of things. Yesterday, the Budget and Planning Minister says this is a budget of infrastructure. That's how he captioned it in his 18-page presentation. Breakdown yesterday. Johnson Chukwu is the Chief Executive Officer at Career Asset Management and is one of the special guests in the studio here. Johnson, talk to us about the capital side of things. Are you encouraged by the size of what you see and what you have heard, where this money will be spent, starting with the power works in housing?
Well, if you look at the figure that was voted for power housing, you will actually realize that that takes the lion's share. But if you now break into the three critical ministries, I do not think it's as material as it looks. Because you're looking at power, you're looking at housing, you're looking at works. And each of those ministries would have the capacity to absorb the entire 600 billion that is going into those three ministries. I think the ministry actually has the lion's share is the Ministry of Transport because of the 200 billion that was set aside as counterpart funding for the road project. But also, if you look at the issues of the monetary value, the actual value, the dollar value of those amounts that were voted, it's actually insignificant given the gap that we have in filling those infrastructure gap. I think one of the things the President mentioned of is the issue of adopting a PPP scheme that will actually bring in the private sector to build those infrastructure. I think if we continue to believe that government has the capacity to build infrastructure today, we're not going to build infrastructure in the next 100 years. We really need to change the model for infrastructure development in the country because the government will not have the funding for those infrastructure that we need.
Okay, thank you very much. Johnson Chukwu from Career Asset Management.